welcome to India Market Open. And what a week behind us. Nifty makes new highs. This morning, of course, we're going to be reacting to, again, good set of numbers or in-line set of numbers from Wipro and HCL Tech. Good morning, guys.
Good morning. And yes, we're looking like we're set up for a great week ahead as well. Global cues looking a little mixed because of inflation data coming in. And we'll come in more detail to the trade setup of the day with Agam as well as, what IT stocks are looking like. But let me quickly take you through what the global cues are. And if you go by global cues, definitely no clear direction there. Let me start with how US closed on Friday, and a mixed bag there. The Dow down nearly 100 points, but the Nasdaq and S&P managed to close mildly up in the green. So what's causing the confusion is two sets of data. On Friday post-close, you had the Producers' Price Index, which is softer than expected, but it comes on the back of hotter than expected CPI data, that's Consumer Price Index. And that has caused some sort of a confusion, making it a mixed sense for markets. That was reflected in the 10-year as well, which managed to, hover below the 4% mark. So the 10-year has slipped below the 4% on the back of inflation data. Crude is a different story. A lot of seesaws up there, and geopolitically, a lot of events that have taken place over the last couple of days. One is Britain and the US striking Houthi targets, with the Houthis saying that they will definitely hit back. So fears of that entire piece sort of expanding are definitely there up in the air. Geopolitically speaking, what's happened in Taiwan is important to note. Maybe not any immediate impact, but yes, the next president of Taiwan is someone called Lai Ching. He's seen as a rebel by the Chinese, who have now come back and said that Taiwan is definitely a part of China. That's going to be one to watch out for. And in fact, let me pull up Asia as a result of that. So a huge slew of data there as well. The PBOC has not cut rates as was expected. So you're seeing Asia up in the green for now. But overall, a lot is going to focus on what happens domestically. And at least the IT pack has performed better than expected, one would say, Agam. Is that reflecting?
Yeah, well, so but at least as far as markets at the moment are concerned, and based on what we've seen in terms of data, Tamanna, right now, we are keeping an eye on three technical parameters. The first one, of course, is the fact that in terms of long positioning, we have seen 63% longs when it comes to FIs and index futures, as compared to, well, around 60 odd percent. Now, this isn't an extremely high number when it comes to FIs, long positioning as far as your index futures are concerned. That's the first thing. The other aspect is that the Nifty put-call ratio, while it has edged higher to around 1.43 as compared to 1.14 earlier, it's still not anywhere close to the levels of 1.6, which again indicates an extremely overbought zone. And perhaps more importantly, we must remember that last week's rally towards 21,900 was largely on account of information technology as well as real estate. The Bank Nifty has not contributed to this up move, and the question then is that will the Bank Nifty now propel the Nifty to that 22,000 mark? We must also remember that through the course of Thursday and Friday, the maximum open interest as far as calls are concerned has shifted to 22,300 from 22,000. So 22,000 at the moment, it seems, will not provide you as much resistance as we speak. And of course, the lower end of the puts have also moved up higher by around 100 odd points. So the range in general has shifted higher, and that also increases the probability of the Nifty hitting 22,000, and that perhaps is the level that we are keeping an eye on today.
Right, so those are important technical levels to watch out for. But just let's take you through what the week's been. It's been outstanding, to say the least. The markets made a new high on Friday's trade, and we closed around those highs as we wrapped up trade last week. 21,894 is what we had, with the markets gaining 247 points. Nifty, like Agam said, is eyeing 22,000, 22,250. That is going to be the next level to watch out for on the index. Earnings-led rally is what we are calling this. It was the Nifty IT index that went home with gains of over 5%. And that is what you want to keep in mind. Infosys itself saw a very sharp move with gains of over 8% in Friday's trade. Reliance Industries as well woke up and played catch-up all through last week. The stock trades at new record highs and gave the support to the index that it was looking for. RIL going home with marginal gains on Friday, but it's actually had a pretty good week so far. Along with that, broader markets, unlike the rest of the texture of the market, was slightly different. They actually underperformed the benchmark. So while the Nifty led the way up, and this is what we've been saying, the second leg of the rally is when the Nifty participants will start playing catch-up. Broader markets underperforming the benchmark in the last week's trading session. Well, as we go into trade this morning, remember it is Martin Luther King's day, so there will be no global cues coming in from the US. It's going to be all about Asia, Europe, and local cues that we'll watch out for. Nifty is eyeing 22,000 is what we were expecting, but intermittent consolidation is what the market participants are expecting. Bulls will be taking room and hope on back of earnings. You've got a whole bunch of banking numbers that are expected. So a whole bunch of Nifty companies, including Reliance Industries, HDFC Bank, ICICI Bank, Kotak, HUL, Asian Paints, Ultratech, amongst others, will be reporting earnings. Onus will be on Bank Nifty to help the Nifty to scale new highs. While Agam talked about the PCR, the VIX has actually gained about 3.7% on Friday, back to levels of about 13. Agam, quick one on Bank Nifty, right? Because there was some selling in Bank Nifty, contrary to what we'd have liked and hoped.
Right.
Last week was all about real estate and IT. We're going into a week when it's heavy on banking earnings. Will the leadership come from Bank Nifty? Is that on the cards, or would it be consolidation again?
It needs to, Tamanna. And, you pardon me, Samina. And, you did mention that the VIX has increased even as we see the indices higher. When that happens, that means that the indices are ready to move on further. That means that, a lot of participants are, in fact, buying more and more options. And that's likely to, play out. Of course, we will have we'll have continued support from the information technology sector. But it is the banks which, at the end of the day, have to play out, in favor of the benchmark indices.
Folks, may I just add that, of course, we've talked about the levels, but this is also an exciting week because of the race to 22,000. We're tantalizingly close, and we have to see what happens. And Samina, you spoke about Martin Luther King Day, which is why markets are shut there. But it's also Makar Sankranti and Pongal. So we wish all of our viewers, best wishes for these festivals, which mark a change of season and harvest. It's going to be an exciting week on the markets. Some more stocks that are going to be on the radar today. And let me start with Tata Consumer Products. That was the big one over the weekend. We're going to have a more detailed piece on Editor's Cut in just a few minutes from now on that. But why is it exciting? Because aggressive inorganic growth strategy there on full display. 2 acquisitions were announced over the weekend. One is Capital Foods, known for their brands Ching Secret and Smith & Jones, these ready-made sauces. They've also acquired Fab India-backed Organic India. The strategy is very clear. Move to higher profit margin products, and both deals now valued about 7,000 crores. The board will meet on the 19th of January to consider the path to fundraise, whether it's going to be equity or debt. Adani Enterprises is another stock that you should watch out for. Their unit, Adani New Industries, has received an LOA. They're going to be setting up a 198 megawatt manufacturing plant for electrolyzers. It's part of a green hydrogen scheme. BHEL is another one that has received an LOA, and a significant one, 15,000 crore rupees from NLC India, and it's for a project at the Talabira thermal power plant. Lupin also is something that we should look for. It's an FDA approval that they've got for a drug which is an extended release capsule. It treats hypertension and migraine, and had an annual sale of about $71 million in the US as per November 23. But like you said, Samina, it's a big week for earnings in focus. HDFC, RIL, all the big ones this week. It's going to be an hectic one.
Yeah, it's going to be busy. I think 8 out of the 15 Nifty companies are reporting this week. So direction really will come from a bunch of earnings. But today as well is going to be all about reacting to a whole bunch of earnings that we saw between Friday closing and on the weekend, and of course as we gear up this morning. Avenue Supermart, now this one definitely worth the mention. It's been a huge underperformer on the exchanges. It's down over 5% for the month. It's down about 2% for the year. Earnings again were not very impressive. While revenue was in line with expectation, it was profitability and margins that came in below what most big brokerages were expecting. Just to take you through it, revenue came at about 6.65% higher at about 28,446. Margins have come in at 19.84, and net profit was higher by 13.5% to come in at 5,874. Stock more than likely will get a thumbs down in early hours of trade. You might see a reaction where the counter will sell off. Well, HCL Tech has been touted as one of the best performing IT companies. Of course, all the 4 big IT companies are now behind us in terms of earnings. HCL Tech has had the best quarter. This, remember, seasonally is also a strong quarter for HCL Tech, which could justify why those numbers were a clear beat. So on back of revenue margins, HCL Tech has outdone most expectations, unlike the others that have performed in line with what the street was expecting. 2 big order wins came in for HCL Tech, and of course the product and platform is what keeps HCL Tech up and about. The stock will be one to watch out for. A gap up is what we're expecting on back of very solid earnings being posted by HCL Tech. Wipro, expectations were low. Performance was in line with expectations. Revenue came in about 1.39% higher, 22,104. EBITDA margin saw an expansion of 105 basis points at 14.71 on back of cost efficiency. Net profit as well was high by 1.24%. Now, the reaction on the exchanges on Wall Street was worth a mention. The ADR went home with gains of 16%, and a huge gap up cannot be ruled out this morning on Wipro as we gear up for trade. So 17% is where that stock has gone home with in overnight trade. Well, along with that, you've also had Anand Rathi. Good quarter for Anand Rathi. We've seen revenues were up 32% to come in at 55,057 versus 38,517. Rather stellar set of numbers. So top line has seen a huge push up on back of improved product mix, better efficiency, and of course standardization of products is what the management has indicated instead of customization in the wealth business. So better capital markets also garners well for better capital market participants like an Anand Rathi. Client attrition, very impressive number, has gone up slightly, but still a good number to have. 0.29% is what we have. So those are the 3 to 4 big earning reactions that the markets will watch out for. We will be seeing a gap up, remember, on HCL Tech and Wipro. You will see a negative opening for Avenue Supermart. Anand Rathi will also see a positive move. Well, that's the big earnings. And of course, a quick check on the Nifty Gift City implied open. It's looking like it could be a strong start. Now, whether 22,000 gets taken out is anybody's guess, but maybe a touch and go and then consolidation.
It's a good implied open this morning. Just some of the numbers today you should watch out for. Angel One, Geo Financial. JFS is definitely something we're watching. Kesoram and Brightcom Group. So a lot of those today. But let's focus on, a big story that came over the weekend and break that down. We're talking about Tata Consumer, and Alex is joining us for more on the editor's cut. That's definitely one that there were a lot of stories doing the round, and then we finally got the details on that, Alex.
No, certainly. And if the stock price is anything to go by, Tamanna, then there was some buzz that there was a large deal in the offing, because just in the first couple of weeks of 2024, the stock is up about 7%. But let's delve a little deeper into the story as we normally do on the editor's cut, and Sajith is joining in to break down some of those numbers for you. Essentially, what the deal is that Tata Consumer Products is set to acquire 75% in Capital Foods and take that up to 100% over a period of time, 100% in Organic India. The enterprise value of those two entities about 7,000 crore rupees. The question is, how do they fund it? What are the implications for the immediate financials? And when does it turn accretive for Tata Consumer? How does it fit into the overall business? I've hopefully laid out this conversation for you. Right. Let's start with the financials. What are the immediate implications? One would assume that they would have to raise to complete these deals.
So, to begin with, let's start off with the kind of acquisition price they have paid. 7,000 crores for two acquisitions, 5,100 crores enterprise value on a no debt, no cash basis. Basically, 5,500 crores they are paying in cash for the entire Capital Foods, which gives them a foothold into the pantry business, where Nestle is a market leader there, and so they will be able to compete with them going forward. Interestingly, Nestle was also in free, but the majority owners of Capital Foods were private equity, General Atlantic and Invest, and they paid a premium. 6.8 times FY24 earnings seems to be a premium paid for this entry into this segment where they are not present at the moment. They must have paid around 1,000 to 1,500 crores more. And I'm saying that because I saw a valuation report of Capital Foods for FY22. They had valued the company at enterprise value of equity value of 3,800 crores. Okay. So, and at that time, they had projected revenues of over 1,000 crores in FY24. They haven't been able to hit 24 revenue targets, 1,000 crores. It's around 750 odd crores which they have hit. Or they're estimating to it, and the margins are around 15.5% or so. So they have paid a premium for Capital Foods going, but it's an entry into a pantry segment which is expected to grow at more than 20%. But that's a hope because they're saying that Capital Foods has nearly 40,000 outlets, yes. And Tata Consumer has 4 million, so it's a 10x distribution channel which is opening up for Capital Foods, and that's why they will be able to push more into it. But it needs to be seen how they're going to do it. Organic India is again a play between domestic and overseas. They have 40% revenues coming from exports. Tata Consumer is trying to play an allied field and trying to enter a pharmacy chain or pharmacy a segment which is very difficult for any FMCG company to enter, because if you look at HUL, when the GSK merger happened, it was estimated that they would be able to push through a lot of their HUL products there, but it's not happening. It's not easy to go through the pharmacy channel because of the licenses and everything which comes into play, which is there. So there also they have paid nearly 5.2 times the revenue, but it's a niche segment where they can get push the entire thing into for an overseas market like a Europe or US, where Tata Consumer has a bigger distribution chain which is there. So from a valuation perspective, they have paid a premium and been aggressive in getting into it. Last time we saw that happening was Tetley acquisition, where they were so aggressively bidding for it. So this seemed to be an aggressive acquisition from that point of view. Now let's set it up into the kind of they have to pay immediately around 35-50 crores for Capital Foods, which is 75% of the valuation, and 1,900 crores for Organic India. That's more than almost 5,000, 6,000 crores they have to raise. The raising is
6,000 crores they have to raise, but I believe they have some 2,500 crore on cash.
They have 2,500 crores cash as of FY23. Yeah. But you need to look into the point of view from dividend paying, because they paid 8.5 rupees per share. Okay. So some 800 odd crores went out from there. So they are generating more than around 1,500 crores in cash every year, but they still have to raise 5,000 crores in debt and equity. Now, my sense is that it will be through a bridge financing or through CDs and NCDs for next 1 year. They're going to raise around 3,000 to 4,000 odd crores from there. Subsequently, the board is meeting on 19th for fundraising, future fundraising in equity, and it's going to be a rights issue where the promoter is going to, Tata Sons is going to participate and underwrite the entire thing if required. And then that would take around 18 months for a rights issue to happen because there are 18-month period by when you have to pay the entire amount. So there is this 1 year short-term loans which are going to come into the books of Tata Consumer, and subsequently that will be replaced by equity which is raised through the rights issue.
Sure. Okay. So you've laid out the valuations. You've laid out how they're going to finance the deal. In all probability, that's going to mean more debt on their books for now, which will convert into equity down the road. The last aspect, of course, is when does this turn accretive? I believe that 1,100 crore of top line is going to be added to Tata Consumer by both these entities. Is that correct?
That's right. So let's assume that they're going to go aggressive and they're going to grow at 20% per annum. They have not been growing at 20% per annum, but let's assume that if they grow at 20% per annum, we are looking at around 1,500 crores of top line coming in, margins of around 15 to 20%, which will come in there, which will be around 150, 200 odd crores of EBITDA margins coming into play, and 200 crores comes to to the at a 25% tax rate, it will come to around 150 odd crores coming to the PAT, which is there. But the issue is that they are going to raise short-term capital.
It's going to be costly.
It's going to be not costly for a Tata company. It's 8% odd because Tata Power and all other are raising at 8%. I assume that they will also get a similar one, 8.5%, which is there, which basically means that there's a short-term interest cost of 200 to 400 crores, which will be in the FY25 P&L.
Speaking of fundraising, while we're on the subject, we have Tata Consumer, which has gained about 50% in the last 12 months. A lot of companies are using this opportunity in the markets to raise funds through issues, not just QIPs, but FPOs also on the cards. Is that something that could be considered at some point?
I don't think FPO would be on the cards. I think it would be more of a rights issue where the promoter retains because Tata promoters have nearly 34% So FPO would dilute the promoter stake. So to retain that 34%, I think it will be a rights issue. And if there is any unsubscribed portion, that will be underwritten by the promoter, so that allows the promoter to increase stake further going forward. So that's one way to look at it. And the fundraise is going to take around 18 months, whether you like it or not. It means 12 to 18 months is that. And FY25 numbers are going to be impacted in the short term, especially while profitability may remain the same. Because
the margins will shrink.
The margins will shrink a little bit. There is a P&L impact of the interest cost which is going to come in, and because there is a rights issue which could be as much as it's a 1 lakh crore odd company, which could be 4 to 5% equity dilution which will happen. There could be a EPS dilution which comes in, and so the EPS accretion happens only by FY26, 27. And Tata Consumer is already trading at a premium, It's around 50, 55, 60 times forward earnings which is there. So the premium is going to go up. And there could be a short-term impact on the price if in that sense.
All right. So thanks, Ajit, for laying all of that out. And hopefully we've given you some perspective before the start of trade. That brings us to the end of this particular edition of the Editor's Cut. But lots lined up in just a bit. We have to slip into a very quick break. On the other side, we're talking IT. Do stay tuned.
Welcome back. We're gearing up for a pretty exciting day of trade. GIFT Nifty is indicating to a very sharp open in early trade. It could be another morning for IT stocks. Apurva Prasad, Institutional Research IT of HDFC Securities, now joins in. Apurva, hope is all around, especially if you're a tech investor. Last week, as IT stocks reacted very positively to Infosys and TCS, Wipro ADR also shot up 17%. But my question to you is, yes, results were in line with expectations, but these expectations were weak expectations. Do you think the stock reaction at this point is justified in your opinion?
So I think one would have to look at it based on different stocks. The reason I'm saying that is I think the reaction is probably to do with the fact that it's not as bad as what was feared. And at the same time, the outlook, which is incrementally getting better. So if you look at some of the factors that were driving the whole slowdown, I think some of those factors would potentially abate. And there are some green shoots that are visible. So I think more than the result per se, the reaction could be merited to a higher probability of numbers, or rather the gradient of recovery. So that to me is the reason. Having said that, if I look at the performance, HCL Tech very clearly is outperformed within the peer set, which was in line with what we were expecting in any case. But I think what's also happening is operationally, most of the companies are looking to improve their margins. So there are some operational levers that is likely to continue. So you're looking at a period where it's not just the growth which is accelerating, but also the margins which will start to look better. And a combination of that would mean much better earnings growth. And you're coming off a period of last 6 to 12 months where there have been earnings downgrade. It's just that the gradient sort of changes from where we stand currently, and I think that's really what's so striking. Having said that, we do think HCL Tech and TCS there is enough room on the upside even from here.
Right. Apurva, we'll try and separate HCL Tech from the other three, because I think HCL Tech is seasonally a strong quarter, and the business back of product and platform is actually doing well. But break this down for me, and I'm looking at this more holistically only because when we look at history, calendar year 2022, when business was booming, margins were falling, and attrition was at a multi-year high. So on a corollary based on better margins and low attrition, can we argue that the underlying business trends are probably not as strong as the market reaction seems to be? And with margins as well, in the last 15 years, when IT companies have done exceptionally well, they've delivered on business performance, they've delivered on stock returns, margins have actually declined. And operational efficiency usually comes in when there's a larger slowdown at play. This is where I am getting a little perplexed, right? In good times, margins actually decline. In better times, margins improve because operational efficiency is there, which really means that we got to take heart from action as opposed to word in terms of management when we look at attrition and margins.
Absolutely. So I agree to that partially, but I don't think in any sense management is indicating to that recovery being very strong. So in fact, if you slice down the commentary, it's actually not too different as compared to what was how it was described even in the last 2 months or 3 months or so. There are some green shoots, so there are some discretionary elements that could start to turn more favorable. There is, of course, a base effect. You're looking at a period when the leakages on the renewals have been happening for the last 3 to 4 quarters. And with the way macros, at least in some areas, could start to improve, I think that would mean positive trends for some of the companies. Case in point being the mortgage subsegment. And then we've seen some of the largest banks that have reported numbers last couple of days or so. And if you look at what they're talking in terms of tech spend, I think that number continues to go up. So while I do agree that these are not the best growing periods as compared to years back, I think it's more to do with the fact that relative to what was happening over the past year, where do you end up landing, which is what I meant. So the sector growth, which came off from 13% last year which will come down to 2 to 3% in FY24, that's going back to high single digit. Now, whether that is 6% next year and 8 to 9%, or does that bounce back to 7-8%, is something at least the next quarter or so we'll have better sense as you get better sense of client enterprise budgets. But yeah, like I said, gradient is looking to improve, and there is always a lead lag factor within margins. So you're looking at attrition, which is in many companies being lower than the pre-COVID lows. You're looking at growth, which is coming back to pre-COVID. So, and margins are still at below pre-COVID levels. So I think even if that normalizes, you're looking at an earnings growth, which should do much better than what it did in FY24. I think that's causing that kind of a reaction. Having said that, we are looking at valuations which are at 2 standard deviation, which is why the stance that we have is sort of more stock selective.
Right. Apurva, 2 very quick questions. Firstly, it's election year in the United States as well. You spoke about client budgets, and that should be firmed up over the course of the next couple of months. My question is that will these client budgets be more about maintenance more than expansion? And once we have the overhang of the US elections out of the way, and after that, perhaps later on, towards the end of this calendar year, we'll have a better understanding of what these companies want to do. And secondly, you have an ad rating on HCL Tech, TCS and Infosys, and a reduce on Wipro. At the moment, with the kind of outperformance that HCL Tech has seen with respect to the other 3, do you think that that's perhaps offers the most amount of growth prospects coming in?
Yes, I'll take your last question first. So yes, HCL Tech offers the best upside, and I would probably add TCS to that list too. That would be our preference. LTI, mind you, which is not reported so far, is our preferred pick within the tier 1 space. But if I look at client budgets, look, a lot of it has moved, to the quarterly cycle, half-yearly cycle. There are multiple push and pulls there. A lot of deal if you look at the deal activity, it's been fairly strong. Barring last quarter where TCS posted about 8.2 billion or so, they've been clocking 10 billion plus. And I don't think the problem has really been ramp up or origination to those deals getting into revenue of the deals that have been awarded last 6 to 9 months. It's those deals which were awarded 2 years, 2.5 years back, when those coming up for renewals, the prioritization of those deals was causing the leakage in revenue. But most of the deals have been ramping up on schedule. Classic example is the Verizon deal, which helped HCL Tech. So deal activity broadly remains fine. There have obviously not been as many mega deals in Q3 as compared to Q2. But if you look at the commentary around the pipeline or the qualified pipeline for most of the companies, that continues to be fairly strong. It's really the whole leakage and renewals that needs to get filled, and whether it happens in a quarter or a couple of months. But like I said, the worst seems to be behind in terms of the sequential performance for most.
Right. Apurva, morning. Tamanna here, and thank you for your time on what to do with this space. I wanted to get a little more specific commentary from you, and let me start with Wipro. A slew of reports this morning with varied outlooks. 2 of them saying sell, 2 saying buy, 1 saying hold. What would you specifically do with each of these 4, Wipro, HCL Tech, TCS and Infosys? Do you think that the fact that the results weren't as bad as expected is now priced in?
So I would say Wipro results were actually pretty much in line with what we were expecting, in line with largely street expectations, but that's more quarter specific, that's more Q3. The company over the call did indicate to the discretionary part of the business on Capco to be improving with the double-digit sequential increase in bookings there. So that could still sort of increase the probability of the revenue growth, or rather the company getting into revenue growth after declining for the year. So you're looking at the prospects improving. Having said that, I think the challenges still remain. So 3/4 of the business still continues to decline. The top 5 accounts are still lower by about 200 million on an annual basis. That continues to be a challenge. And of course, there is the senior management attrition, which has challenges of its own. So if I put together all of that, look at where valuations are relative to its historical average, this would remain reduced for us.
If I may ask you beyond, and I know Samina has a follow-up on these four, but if I may, may ask you on your view, Apurva, beyond the big four, and where you see the most upside. For example, would you still say a Coforge, LTI, Mindtree show a lot of potential from here on?
Yes, so LTI, Mindtree, I think there is a good upside there. There is probably the best in terms of a PEG basis, growth premium over the next 2 to 3 years, low teens dollar revenue growth plus margin expansion. So you're looking at a high teens earnings compounding over the next 2 to 3 years for LTI, Mindtree. Persistent Systems would be one company that we've liked for a long time. I think that continues to deliver fairly consistent. Again, margin expansion scope there. And within the smaller names, Birlasoft, that would be another one where there is a turnaround in the company and the numbers.
Apurva, it's fair to assume that you don't actually believe that the current rally in IT stocks is, blotted by historically high valuations and historically weak business trends. But very quickly, near-term change on the cards in terms of your three top picks across from the large and the mid cap. What are your top three picks?
Yeah, so our top picks from the large caps is LTI, Mindtree. That would be a top pick. From the mid caps, it would be Persistent Systems. We've been fairly consistent with that. And from the smaller ones would be Birlasoft as well.
Thank you, Apurva. LTI, Mindtree, Persistent Systems, and Birlasoft. Birlasoft, remember, saw a very, very sharp rally on Friday's trade. In the last hour, in fact, the counter picked up activity and went home with a gain of about 5.5%. But great talking to you, Apurva. Well, of course, we've shifted, sadly, 8:30 is when we focus on Agam's segment of F&O Qs, but I've moved that by a few minutes. Agam, it was all about IT on Friday, and it might be all about IT even this morning.
Yeah, quite possibly, Samina. And at the moment, what we're looking at is substantial gains coming through last Friday. And, well, at least historically, on a weekly seasonality basis, if you do have strength on Friday, that tends to extend at least in the early session in the Monday morning. And that begs the question, where, in fact, we can hit 22,000 in early opening trade. For now, of course, the indications are towards a high probability of something like that happening. As far as your day on Nifty is concerned, we did see a more addition in open interest towards fresh longs, and as well, we're currently standing at just shy of the 22,000 mark. As far as the Bank Nifty is concerned, a lot of unwinding coming through, and even as the index advanced by around 0.5%, we're expecting the Bank Nifty to at least move towards 48,000. That's a big hurdle at the moment, and well, we did see a lot of unwinding of earlier shots being played into the system. Moving on, the kind of range that we are expecting the Nifty to move within. Well, we are keeping an eye on 21,700 on the lower end, even though that range is, continuing to shift between 21,700 and 21,800 based on maximum open interest inputs. On the higher end, we're keeping an eye on now at 22,300. As I was mentioning earlier as well, the call open interest max OI has moved from 22,000 to 22,300, which also means that 22,000 will not provide as much of a resistance for the Nifty at the moment. Let's take a look at what's happened as far as change in OI goes on Friday. And again, this was potentially expected lies, considering we saw a lot of writing around 21,700, 21,800, 21,900 puts. Now, let's talk about stocks then. And in terms of those stocks which saw, advances, nearly all the top OI gainers were towards fresh longs. So we had ONGC, Tata Consumers, of course, is going to also react on the acquisition news today. Coforge, L&T Technologies, and HCL Tech. HCL Tech likely could also see a further up move based on the kind of earnings that it's seen. Now, about a short covering for Polycab, but it's still below the mark of 4,000, so keep an eye on that one. And LDIM was also the one which saw a short covering from the information technology space. Besides that, Gujarat Gas, Exide, and Dr. Lal PathLabs under pressure, and a bout of longs unwinding coming through. But as far as the benchmarks go, where do we go and what do we do and how do we place our bets? Well, let's get in Soni Patnaik of JM Financial, who's joining us on the show. Soni, good morning and thanks so much for joining in. Let's start with your view on the Nifty and the Bank Nifty. I believe you also have an idea, a trading idea as far as the Bank Nifty is concerned. Can you take us through that?
Definitely. Good morning, Agam and Tamanna. Thank you so much for having me on the show. So I think rightly, as you've pointed out, Nifty seems to take up the range on the higher side of 20 to 300 as maximum open interest has shifted to 20 to 300 to 20 to 500. So, 21,700 and 21,800, they are instantly very good immediate support. 21,800 put call ratio itself has crossed 2.6 level, which is indicating the dominance of put writers at 21,800 level. So I think as long as 21,800, 750 on an immediate basis, the support band is holding. Nifty will attempt to test 22,300 to 22,400, on the higher side that we can see. So this is for the Nifty. As long as Bank Nifty is concerned, Bank Nifty on a similar, structure, we've seen a 47,500 put call ratio has crossed 1.4, so which is also indicating good support as put writers are going to defend this level on any intraday dip. However, Bank Nifty's breakout is yet to come. It's going to be above 48,500 level. So my trading idea is more on the Bank Nifty, assuming that the 48,500 level is broken and the breakout happens in Bank Nifty. So above that, you can see it leading towards 49,500, 49,700 odd levels on an immediate basis. So the trading idea for Bank Nifty is to buy a 50,000 call option for the 25th Jan expiry. The premium is hardly 25-30 rupees. So, you can buy in that range and, keeping a very small stop loss of 1 to 2 rupees as it itself is on a lower premium. You can see the premium doubling to maybe 80 to 130, provided the Bank Nifty breakout happens.
Certainly a very interesting idea because at the moment, Soni is playing for the potential of the Bank Nifty to move above 48,500, where she sees a lot of resistance. And should the Bank Nifty move above 48,500 and take that level out potentially, well, if you in fact go ahead and do buy that 50,000 call as recommended by her, well, you're likely to make a substantial amount of money and a probability of that particular premium doubling. So a very interesting call there. Soni, I believe you also have another stock-specific idea from the banking space?
Yes, so the other idea is from ICICI Bank. We've seen it giving good long built-up positions from Friday. And, technically also, if you look at it, has crossed its 990 odd resistance and closed above it. There is also positive RSI divergence and MACD is also on the verge of giving you that positive divergence. So it has shown a reversal on technical charts as well as strong on options data. So I think, it's holding a potential to test 1,040, 1,050 odd levels. So there's a call option play over here. So ICICI Bank 1,020 call option. You can buy at 12.5 rupees, keeping a small stop loss of 7 and a target of 23.
All right, Soni. Well, we'll leave it at that. Thank you so much for joining us and taking us through your views on the Bank Nifty as well as the stock idea on ICICI Bank. Well, so we'll continue to keep an eye on that one. With that, it's back to you, Samina.
Agam, I know you had that quick chat with Soni about ICICI Bank and Bank Nifty, but you've got ICICI Bank, you've got Kotak, and you've got HDFC Bank, all three reporting this week. Assuming we don't get the support that we're seeking from Bank Nifty, does that mean that sustaining above levels of 22,000 could be difficult, and that could indirectly then mean a phase of consolidation for the next couple of days?
Absolutely, 100%, Samina. So two things that we need to keep an eye on. One is the levels at which the PCR will go at based on the expectation of these banking names, where we're going to have some sort of adjustments in terms of technical levels. And the technical levels, to a certain extent, will also give you an idea about what the markets are expecting once these earnings come through, how the markets are placing their bets post-earnings, and that will give us a good idea. Considering the fact that at the moment the Nifty does seem just a tad bit overbought, it's not extremely overbought, not by any parameter. Well, if we do in fact see some amount of disappointment, it's very natural and normal perhaps for the Nifty to move back into a consolidating range. And in that case, of course, 22,000, 22,100 could perhaps, be the upper bound of the Nifty, at least in the near term. And on the lower end, and we'll continue to keep an eye on 21,800 going in. Samina.
All right, thank you for that, Agam. So it's going to be an exciting day. Let's look at where your implied open is in the GIFT Nifty, indicating that you're going to hit that 22,000. So fireworks possibly this Monday. Kunal Rambhia, founder of The Street, is with us on the show, as is Vinit Bolinjkar. He's head of research at Ventura Securities. Very good morning to both of you. Thank you for joining us today on India Market Open. Kunal, is today going to be that day? I know 22,000 now is just the next milestone on the charts, but it's a significant one at that. Where is the strength in your views? What would be your Nifty and Bank Nifty levels this morning?
Hi, very good morning. Thanks for having me on the show, and good morning to all our viewers also. So if you look at the Nifty, yes, certainly we saw the 10 days of consolidation and a massive breakout on the Friday led by the IT segment. And what we are witnessing now on the chart is the opening up of a new range on the higher side. So if you look at the support, I think it's placed at around 21,750 on the Nifty spot level, which was the earlier breakout level. And on the higher side, we can expect the levels of around 22,150 kind of levels to watch out for in a day or two at least. When it comes to Bank Nifty, now Bank Nifty has been a massively underperforming segment so far. What we are seeing is almost 21 days of consolidation, and the breakout is yet to come. Forget about the breakout, it's near to the support in fact. So if someone wants to play on a risk-reward ratio, I think Bank Nifty can be a good bet. But yeah, the momentum is missing. So the levels to watch out for will be, say on the breakout side, I'm expecting the levels of around 47,950. I think above 47,950, we can see the new levels of 48,500 levels to come. And on the support side, I think 2 days back, the bottom, which was made at around 47,200, can be a good support from the positional point of view. So for this whole week, these are the levels which I'm watching out for to trade Bank Nifty.
To ask you, Kunal, about the Nifty IT, up 5% in Friday's trade. You have the HCL Tech Wipro news to be priced in as well. What do you think is going to happen there, and how would you play the Nifty IT?
Yeah, hi, morning. So if you look at the Bank Nifty IT, the extreme bottom was seen somewhere in April 2023. And since then, this index is actually making a clear higher top, higher bottom. It was almost a month of consolidation again. And the blessings of these results and the effect of the same, I think we have seen a new fresh breakout. The support is now placed at around 35,000. Yeah, that's almost 1,500 points away from the present level. And on the higher side, I think 37,200 levels are something to watch out for. It's a clear breakout segment. So now the strategy here should be to buy on decline rather than buying on the breakout because of unfavorable risk reward ratio. If someone is holding the positions, certainly trail the stop loss. And if someone is willing to create the position, let's wait for some kind of consolidation and a bit of correction to initiate the new buys. But yeah, it's a bullish segment. All in all, to buy on dip is a good strategy.
Right. We also have with us Vinit Bolinjkar joining in for a fundamental view on the markets. Vinit, we've gained 16% since October 23rd lows. And it seems like there's still so much steam left on the markets. Do you agree? Do you think this rally has more legs? And also what we've seen is on expected lines where the large cap would take leadership. And that's what's playing out.
Yeah, so it's very interesting, how in a structured manner, the large caps have started participating in the runs. You had the two-wheeler space come in, followed by the other old economy sectors. And now with, the tech stocks not showing too bad numbers, no bad news is actually good news, and the entire IT pack has started performing well. We think that there's substantial gains to be made in the IT sector, and we have actually first time turned overweight after almost 9 months on this segment. So we believe that we will see some very good gains coming in. This should support the Nifty a lot because this is one of the largest contributing segments. Secondly, if you look at the PSU banks, there is going to be a lot of adjustment in terms of new wage increments that they get, and this will be on a retrospective basis. So to that extent, PSU banks could underperform the large caps, especially when the results are declared. And this will push the money rotation into the large private banks, and hence we expect these to perform significantly better. My favorites are Axis, HDFC, and Kotak, which have been stark underperformers.
So, Vinit, it's fair for me to assume that you would be looking to add to HDFC Bank ahead of its numbers this week, and also Kotak and ICICI Bank. Would you also take exposure to the stocks ahead of earnings?
Yes, as I said, in the order of Axis, Kotak, and HDFC Bank, that is what I would be looking to enter into in terms of the private banks.
Vinit, let's get your take on the IT pack right now. The Wipro ADR indicates a very good opening this morning. How would you strategize on IT? There's a variety, and we had an excellent conversation with Apurva as well, a variety of views on what exactly to do with some of these companies. Where do you stand?
I think the congestion that happened, over the last year underperformance, I think we've seen a blowout breakout happening. All the stocks overnight after their result, especially after Infosys declared their numbers, they've been up at least 10%. I think one of the stocks which has not zoomed significantly is HCL Tech. So among the big boys, HCL Tech gives you a very good entry point, having, wanting to play catch up. And to my mind, among the top 4 IT stocks, I think HCL Tech has the best balance of software services and productive services. So I believe that HCL Tech should do very well.
HCL Tech, in fact, is really separating the boys from the men. It's been one counter that's beaten expectations on revenue and profitability margins, and commentary as well seems quite promising. And the first one really to ramp up execution in terms of comparing it to its other peers. Kunal, Wipro ADR went home with gains of 17%. If we do get a gap up, which we will this morning, at what level would you consider initiating a fresh position? Because I don't think there will be much of a chance to get that opening gains. But once the stock settles at about 9:30, 9:45, would you be a fresh buyer, a fresh long trade on Wipro?
See, again, when we initiate a buy on the fresh breakout, like the event day, we'll have to be very cautious on the risk reward also. So if you look at the overall long-term chart, the first breakout was at around 440, and what we saw was on the Friday, it in fact made a low of around 446. So that was a retesting. I will not really be keen to initiate a buy on the breakout as such now at this level. But yeah, if someone wants to play, then we'll have to wait for 15 minutes after 9:30. If the new fresh high comes on the screen, then with the day's low as a stop loss, one can certainly buy. But that's going to be very short-term view. I'm expecting the targets of around 495 to 500 kind of levels as a first target, and that would be the first resistance. So near those levels, certainly I'll think of reducing my short-term long positions rather than buying new. But for short-term, for intraday, one can certainly buy about 930 high.
HCL Tech, that will get a gap up to maybe not as big as Wipro, and it's not one of those counters that are very active on the trading front. But if you do get a gap up on HCL, what would you do with this one on the charts?
This is again one of those trending counters which we are witnessing since June 2023. And the counter is likely to open near to 1575, 1580 kind of levels. So my first target on this is around 1600. So for those 20-30 points, if someone wants to play, that's of around 2%. Yes, certainly one can go ahead with it. But the trailing stop loss on this for my position will now be on at around 1525, 1530. That's a good support. So, for the short-term traders, it's fine. But if someone wants to go positional, keep these levels of 1535, 1540, 1525, 1530 in mind. One can think of initiating a buy near those levels on a bit of decline, but not the fresh position in the gap of opening at least.
All right, stay on with us, Kunal and Vinit. We're set for an interesting morning. But let's take a quick look at some of the counters that should be on your watch list. Anushi joins us with more. Anushi.
Right. So now we have Avenue Supermarts, which is going to be the major counter in focus today after it came out with its Q3 earning update, wherein its revenue showed about a 17% growth, which was higher than the estimates. But its EBITDA and margins were down at about 9 bips at 8.25% compared to the market estimate of about 8.3%. Even the net profit, if you see, that showed about a 17% growth, but was lower than the 765 crore of estimates. So other than that, the company also showed that it has recorded about 341 stores as of 31st December, adding about 5 new stores, which is comparatively lower than what the net additions that they have made in their previous quarters. So that is all on the Q3, but other than that, there were also two updates which came out, two brokerage calls in which Citi has a negative view on Avenue Supermarts, maintaining its sell rating with a target price of about 3,200, citing that the Q3 PAT was 4% below their estimates, while the revenue was in line post the trading update. Also, they are seeing that the average revenue per square feet that the company reported was 10% below. So, but what we can keep an eye on is the contribution from its general merchandise and apparel segment, which has been the company's weak point over the quarters, wherein the management now sees a stabilization trend going forward. Other than that, Motilal has a complete opposite view, wherein they are maintaining their buy rating at a target price of about 4,700, citing that they expect about a revenue CAGR growth of about 26% over the FY24 to 26 period. And other than also, they see that the revenue per square feet now aiding to the company's growth performance going forward.
All right, thank you for that, Anushi. Jeffries also has a note out on DMart Avenue, saying the worst is behind for the mix, but meaningful pickup awaited, and they're going ahead with a hold. Very short break, but we'll be right back with pre-open rates. Stay tuned. Welcome back. You're watching India Market Open. Let's go across to Kunal and Vinit. We just have a couple of minutes, a minute and a half actually, to pre-open, and we're looking like we're going to hit that 22,000 mark in opening trade. We'll take a look at how that goes. Let me start with you, Kunal, on especially on Avenue. We spoke about Avenue before going into the break. Decent results, and we were just talking about what Jeffries has said. They've maintained a hold with an unchanged target price of 4,200 rupees, saying the worst is behind for them, but meaningful pickup awaited. Any views on Avenue, Kunal?
So again, if you look at the broader chart formation from November 2021, this counter was a gross underperformer, and if you look at the overall trend, it's been negative. But on the chart formation, we can see a symmetrical triangle formation, which is very bullish in nature. In fact, I'm waiting for the breakout level, and the breakout is placed at around 4150. So above 4150, I think this counter will be ready for a new rally till almost 4700 to 4800. But I will not be keen to buy before the breakout. So yes, certainly the announcement is positive, and the result updates are also quite encouraging. So I'll wait for the closing above 41, at least 4100. Above 4100 will revisit, and will initiate a buy about 4150 with the target of 4700.
Vinit, I'll come to you on Avenue Supermart. I mean, those business updates were disappointing, earnings as well. Oh, actually, we only have, 14 seconds to pre-open. We'll address that in a second. So I'll come back to you, Vinit. But my question really is going to be on Avenue Supermart. And that's what we want to talk about. Numbers slightly disappointing, but about 2 seconds to go. It looks like, pre-open, not a big deal. It's going to be all over the place this morning. And like we thought, it is all over the place. 81 points high. 22,000 has been taken out in pre-open trade. Too early to call it that, but for now, 125-point gain is what we're expecting. Wipro, I think that's going to be the stock of the morning. If we can just quickly pull up Wipro and HCL Tech and see how those stocks are doing. Wipro should be seeing a pretty big gap up on back of its ADR. 10% high on Wipro in pre-open trade is what we have. So I guess if you're looking to initiate a new trade, it's going to be tough to pull that through till the stock settles at about 945, 930, 945. Along with that, if we can just get HCL Tech as well, that stock also looking fairly good. It's another 10% on HCL, 10% on Wipro. While we're at it, take a look at Infosys and TCS as well. Those were the big movers on trade on Friday. Infi consolidating after a very sharp move. TCS still adding to another 2% gain in the early session. It looks like 22,000 is on the cards, very, very likely to be hit at the word go at 9:15 this morning. We will 22,081. So yeah, it looks like it could be given in the first few minutes itself. Vinit, I mean, those pre-open point gains are looking very, very impressive, but we'll let that settle for a few minutes. Talk to me about Avenue Supermart. The stock has been a huge underperformer for 2 years. You've had a little bit of stake buys that have taken place as well. But business is slow. There has been slower same-store sales. Revenue is below expectation. Profits and margins are slightly better than what brokers were expecting. But not a great set of numbers, right? And keeping that in mind, what do you do with the stock?
I think it's getting into a range where, the bottom side is getting limited. And, the management has a very encouraging commentary on pickup in non-grocery merchandise. So I believe with the margins kind of flat and expectation of pickup in the, non-grocery merchandise, I think this kind of situation calls for a value buy. I'm tending to get positive on the stock, but would watch out for one more quarter, before really initiating on where the stock is heading.
I just want to quickly talk about Metropolis as well. They've put out a statement that you're probably seeing on your ticker, talking about, how their share of what they've done in the Mohalla clinics in Delhi is only very minimal. And that has come in because of a report last week saying that there are ghost patients in these Mohalla clinics. But Metropolis doing okay in pre-open. The big news, of course, Nifty has hit the 22,000 mark in pre-open trade, and we'll just pull up and see if it's settling there. It's looking fairly comfortable, actually, above the 22,000 mark. Suffice to say that you're going to see a very, very strong morning. I'm going to quickly go across to Varsha for some more stocks that you should watch out, especially on a day like this. Varsha, what's on your list?
Good morning, guys. So let's start with Adani Enterprises, wherein it gets LOA from Solar Energy Corp for setting up electrolyzers under PLI scheme. Now, since this is a PLI scheme, so maximum incentive will be allocated over 5 years, which is set at 293 crores. Also, manufacturing facility will be set up in next 30 months. Then we have BHEL, where company gets LOA for EPC package for Talibira Thermal Power Project in Odisha. Now, this is from NLC India. The project is from NLC India, and the project is for supply of equipment, commissioning and civil works, and the cost of project is almost 15,000 crores, and time period within which this contract need to be executed is 64 months. Then we have Lupin, wherein it got FDA approval for one of its drug which is used for hypertension and migraine, and this above drug is actually a generic equivalent by ANI Pharmaceuticals, and product will be manufactured at company's Pithampur facility. Also, if you see the estimated annual sales as on November 23 is almost $71 million. Then lastly, we have FSN e-commerce, popularly known as Nykaa, where Lexdale International has sold almost 0.91% stake in the company. And this Lexdale International is owned by Harinder Pal Singh Banga. Stakes is sold at average price of rupees 183 per share. Also, the total transaction is valued at 495 crores. As on September 23, if you see the shareholding pattern, so Harinder Pal Singh Banga almost owns 6.41% in the company.
All right, thank you for that. Varsha there with some of those stocks to watch, but what should really be on your radar is the index. Looking like it's set for a fabulous opening. Kunal, let me come to you on, how would you really strategize in the first 15 minutes of trade? Looking like we're very, very comfortably set above the 22,000 mark at this point. Do you expect us to hold at these levels?
So certainly, yes. Looking at the strength which we are witnessing on the index, I think this might just continue for a couple of more 100 points on the Nifty. So first level which we discussed pre-opening itself was around 22,150, and seems that we are opening there itself. So that's the first target, and if at all we settle on here itself for the whole day, then I think further can be 22,350 kind of levels on the Nifty front. We'll have to watch out for the Bank Nifty. I think as we discussed, it's an underperforming segment. So I think 48,500 is something which I'm eyeing on Bank Nifty as a first level, and then we'll review the levels.
Kunal, and specifically on HDFC, Axis, Kotak, how would you trade them this morning? Would you trade them this morning, rather?
Certainly, yes. If you ask me about the Kotak, I'm very bullish. Reason being, it's a silent mover within the range itself, and within the range, it's making a higher top, higher bottom formation. So if you look at the recent support, that's at around 1815, 1820 levels. So with that level as a stop loss, one can certainly trade on Kotak, and the first conservative target on this can be 1900. So, I always look out for the risk reward ratio, and I think Kotak is well poised for that as of now. So among the private segment banks, I think Kotak is the favorite choice as of now.
Right, Kotak is the favorite, is what Kunal is indicating. 8 minutes to go, and it looks like pre-open would be settling around levels of 22,000. Stock of the morning will be Wipro and HCL Tech. Both those counters expected to see a 10% gap up. Pull up Avenue Supermart and Anand Rathi and HDFC as well. Those are three of the numbers that the street will be reacting to. Dima, Avenue also not looking bad, actually. Now, despite the fact that numbers were slightly disappointing, the stock is up 2%. Anand Rathi, on the other hand, which has posted a good set of numbers, is indicating to a 3.5% gap down. Now, that's very interesting. Den Networks, that was the other one that reported earnings, will be a stock to watch out for. Flat start is what we're expecting. Vinit, we've talked about banks extensively, but I want to talk about other stocks which are beneficiaries of the euphoria in capital markets. And Anand Rathi, HDFC, AMC are two of those counters. Both, of course, will see a reaction to numbers today. Anand Rathi, what do you make of it? The numbers are better than expected, but the stock is indicating to a gap down opening. Would that be an opportunity to buy? And this is more strategic, actually.
So, I think Anand Rathi has rallied far ahead of its fundamentals. Undoubtedly a great stock to buy. But, I think the pricing is not right. I would wait for a substantial decline before looking at this. 2,500 would, be my more comfort level to buy this stock. I won't change this. I won't chase the momentum out.
HDFC, AMC, Vinit?
Definitely. I think that would be there on my buying list. And we expect the stock to do very well from these levels also.
Let's just take a look at where pre-open rates have settled, and clearly we're in for a whopper of a Monday. We're set to open above the 22,000 mark. IT is the big gainer of the day, but even if you look at in the broader markets, we're looking completely up in the green. Counters like BHEL looking like they're up for a great start. We mentioned that in our trade setup list as well. They've got a 15,000 crore LOA, IRFC, Polycab, all of those counters looking very good. So is Coforge, L&T Tech, Persistent. Some of the mid-cap IT stocks also doing very well this morning. And I'm going to come to you on that, Kunal. Your top picks just, as the markets open right now, and would those be in the IT pack, mid-cap IT, or extending beyond?
So I'm extending beyond. Reason being, again, IT is overheated, and at this level, I don't find myself to be comfortable with the risk reward. So the first counter which I'll look out is for SBI. Now on the SBI, what you can see is there is a retesting of the breakout zone, and the counter is opening again with a gap today. I think this counter is well poised for the new rally from the present levels. So keeping the stop loss of around 620, I think one can initiate a buy on SBI with the target of around 660. That's the first counter. The second is Indiabulls Housing. Now, if you look at the counter right now, it's opening again in the gap. It's opening at around 227. So with the stop loss of 220, one can initiate a buy on Indiabulls Housing Finance. I think, again, this counter, which we saw the previous month, heading into higher bottom formation, might just continue even for long. With a target of 235, one can initiate a buy on that also. And the third is from the pharmaceutical pack. That's Divi's Lab. We saw at the beginning of the month, the counter gave a fresh breakout. It's near to the support level itself. So with the stop loss of around 38.70, that's just 30 points away from the present level, one can initiate a buy with the first target of 4,050. So these are the three counters which I'll be watching out for the day, even for the week going forward.
Vinit, what would be your top counters on a day like today?
I think Indiabulls Housing Finance, has got a little bit of heard on street kind of information that they're looking to raise capital. Now, if that were to be true, this stock at about half-time book is, I think, very, very interestingly poised, given the fact that, it's extremely cheap. And if there is more capital coming in at these levels, then I believe that this stock can be an outperformer.
Vinit, very quickly, we are running out of time, but have you been tracking the activity, the acquisition of Tata Consumers? There's a rights issue, fundraising, two big acquisitions. We were expecting one, but they've gone out and done two big ones in a day. What is the call? Fundamentally, if you're an investor on Tata Consumer, would this be enough and more reason to buy the stock or even hold it?
So I would keep, if you're owning it, I would keep holding on to this. If you are looking to buy into this, I would wait for a dip. That would be my strategy to play Tata Consumers going ahead from here.
Absolutely. Just look at your IT pack this morning, completely on fire. Wipro, TCS, HCL Tech, all of them, Infosys, all doing fantastically. Wipro's on circuit right now. HCL Tech about 4.5% up pre-open. Infi also continuing with its day of gains. You are seeing a massive win in the IT space, something which has still not reached its full potential, some would say. I want to come to you, Kunal, though, on which of these counters do you like best among your IT pack as well?
So if I were to select one counter at the present level, I think I'll go ahead with Emphasis. Look at the formation. It's a clear higher top, higher bottom formation. In fact, the previous high is still not taken out. And from the risk reward point of view, I think Emphasis is the best poised for the new rally from the present level. So with the stop loss of around 2,600, again, that's 125 points away from the present level. I think one can initiate a buy. And the first target to watch out for on this counter will be 3,000 plus level. So first target is 3,000, and certainly we'll keep revising this higher going forward. I think this counter has a lot of potential to reach the previous high, that's 3,400 mark.
Yeah, absolutely. All right, quick pre-open view from you, Vinit, on whether banks are the next big bet. You have a huge number of results coming in today as well. And what would you like in that space?
So I will put my money on private banks. In private banks, as I told you earlier, the pecking order would be Axis Bank, Kotak, and HDFC Bank, and followed by Karnataka Bank.
Right. And Kunal, how do you feel about the BFSI space?
Certainly very interesting, but I'll go ahead with a little bit of the PSU segment. And in the PSU segment, I'll go ahead with the small banks like IOB, Indian Overseas Bank. I think it's poised for a new rally from the present level. So with the minimum stop loss of around 5% I think one can expect the targets of around 15 to 20% in a very short time.
Right, it's going to be a very, very exciting Monday. The markets, remember, went home with lots of weekend share on Friday. We made a new life high on Friday's close at 21,900. 894 to be precise was the closing high. And this morning, pre-open is indicating to start above levels of 22,000. On the Nifty, the Sensex expected to open above levels of 73,000. Remember, both these levels have been taken out in pre-open trade. IT continues to be lending enough and more support. Big gains on the likes of a Wipro, HCL Tech. Even TCS is seeing some buying this morning, at least in pre-open. Infosys, though, a little muted after an 8% move that we saw on the counter. Stocks like Just Dial expected to see a gap up as well on back of earnings. Avenue Supermart, Anand Rathi are a few other names that will react very sharply. The Nifty, remember, is up nearly 17% from its October 23rd lows. So very soon have we managed to gain about 17% in less than 2.5 months. On the index, participation largely comes from domestic markets, but it's corporate earnings that is giving the markets a leg up. Now, to sustain about 22,000, you're going to require banks to pull through, and you've got three big banks on the Nifty 50 that will report this week. You've got HDFC, Kotak, and ICICI Bank, and that's the start. Oh wow, okay, so 22,032 is what we have, 147 points higher, and this is completely and only supported by domestic cues this morning. 0.6% higher, 144 points is what we have on the Nifty 50. Lots of euphoria, lots of fireworks, and it seems like it's sustaining. We're still around 22,000, but that level has been hit, and we're looking at those levels as we speak. The Sensex also well comfortably above 73,000. So you've got 73,054 on the index, and Nifty 50 underperforming a little bit, but still trading firm. 170 points of opening gains on Bank Nifty is what we have. Broader markets this morning moving in line with the benchmark. If we can just get the Nifty 50 back up and see what's happening. 22,000 is holding, and it's holding steady, so it's not a touch and go situation that we've seen. There's been no pressure coming in on the Nifty from the word go, so no sell calls really being activated at 22,000 at this stage. Broader markets doing in line with the benchmark, and the morning belongs to IT again. After a 5% move on Nifty IT on Friday, you've got another 2.5% on Nifty IT. If we can quickly pull up what's happening on the Nifty stocks, we'll get a better understanding of the key contributors. There you go. No surprises there. Wipro, after a 17% move on the ADR, has seen a gap up of 10%, and those gains are capped on it this morning. If there was no circuit, you probably would see the stock see some more gains. Tech Mahindra, HCL Tech is up 3.5%. So while the numbers were very solid, the stock is not looking as excited as Wipro, but still trading with a gain of 3.5%. Tech Mahindra numbers before the numbers are both trading firm, 3.5% on Tech Mahindra. LTI Mindtree is a pick that most analysts like. The stock seeing a gain of 2.5% ahead of numbers. Infosys, after an 8% move, gains another 2% this morning. TC is building on its rally from Friday. Banks aren't doing too badly, so SBI is up 1%. IndusInd Bank is looking good, but HDFC, Kotak, Axis are the ones you want to watch out for. ICICI Bank, HDFC, and Kotak will be reporting numbers. All those three counters will be on the screen. They're trading a little concern. ICICI Bank is trading flat, no major gains there. Asian Paints also looks flat ahead of numbers, but Tamanna, I think IT has single-handedly helped the Nifty make a new high this morning.
Well, I would say what a comeback for a sector which was being beaten down for most of 2023. 2024 definitely is the year of IT, at least the start of it so far. All right, what else is buzzing in the broader market? Tata Consumer, let's look at that. Big news over the weekend on acquisitions. Two companies is what they're buying, one in the BPC space, and one, of course, the makers of Ching's secret sauces. So let's take a look at how Tata Consumers is doing this morning. It had a gap up, at least when it came to your pre-open rates, and it's consolidated. Okay, about 1% up, nothing too great. Avenue Supermarkets is the other one I want to look at, how D-Mart is doing. Decent set of numbers, a variety of views on what you should do next with the stock, and no one direction that we could see, but decent set of numbers, I would say, about 1.5% up. The IT pack is something that Samina's talked about in detail, but let's just recap what's happening there. And yes, they're all up in the green. I would only pick HDFC Life as the other one, and that's one which is losing out on the back of numbers. And as we've been saying all morning, it's all about whether you are putting your mouth where you're proving what you've claimed would happen. And HDFC Life is not seeing a great morning in that sense. Polycab and Zomato, the only other two on my list. Polycab because it's been in the news all of last week. There's a Jefferies note out on it today as well. And it saw a bit of recovery over the last few days. So we can take a look at how Polycab is doing. It's doing fine. And Zomato, it had a pretty big set of a big block deal before open. That stock about 1% down now in trade. So all in all, a really good morning and a big number that you've seen hit on your screens.
Indeed, it is significant. I think 22,000, 73,000, the Sensex, all of that, and holding on to that is what we're taking heart from. A. Bala, MD and CEO of Aditya Birla Sun Life Mutual Fund, joins in. Hi, Bala. Good morning. Thank you very much for joining us on this very pleasant Monday morning. I know 22,000, technically, of course, we can discuss this, but this looks great, right? One-way move over the last couple of days. We consolidated in the early part of Jan, but have taken out two new record record highs and 22,000 in less than 24 hours of trading.
Yeah, I think it's a good beginning on the day of Makar Sankranti, which is supposed to indicate the prosperity for the country as a whole, because at the beginning of the harvest season. I'm happy to see the market touching a new high and forming a 20,000 index. And again, as it was happened last week, the sectoral rotations has been one of the themes we've been working for quite some time. And some of the sectors which did go through a period of consolidation and its own underperformance in the market for a variety of reasons. Their quarterly research numbers also set the ball rolling for next round of move. Definitely, I think the all-round the positivity that we are witnessing, both in the economic growth as well as on stable movement both in the interest rate and currency. And the earnings continue to remain positive. Therefore, the overall market remains buoyant.
Bala, good morning. Tamanna here, and you're absolutely right. Makar Sankranti celebrates a change of season. Are we seeing a change of season in the sense the uncertainty of what your quarterly numbers are going to be fading, global cues uncertainty also fading? Do you see a secular bull run continuing from here?
So I think looks like the momentum will continue for 2-3 reasons. One, inflation is coming under check and control, led by both the fuel prices as well as the food prices are a lot more under control. Though last week there was a marginal increase, but that should not make somebody to get worried given the fact that it's still below the overall expectation that we had kept. Second is spending, with the good harvest season being there, the spending pattern also I think it seems to be on the rise. For the consumption-led growth also things should come. And broadly, the government continues to push up their public sector capex, now leading to a major announcement coming on the private sector capex is also now beginning to come. So therefore, you'll probably find a variety of sectors doing better than even the last year. As long as interest rate doesn't go up and not going to cost them in incremental cost, we should probably see the momentum continuing. And global cues continues more favor of India, given the fact China as an economy continues to struggle and not many are have taken a large bet are disappointed for the last year, 2023. Therefore, money is not going to anywhere other than India in a hurry. Therefore, we should continue to get that global support as well.
Looking good all over. Bala, stay with us. We've also got Vikas Khemani, founder of Katyal and Captain Advisors, joining in. Vikas, what a morning. 17% from our October 23rd lows, 1,000 points in 25 trading days, led by the large cap as we were expecting. This is significant. It's a auspicious day as well.
Absolutely. I think it is just a continuation of, the India story playing out. I think just like Bala was mentioning that, we are seeing a very broad-based economic recovery. Last quarter was the first quarter when corporate earnings were even ahead of expectations. So, when your corporate earnings are strong, when your liquidity is strong, both domestic as well as international, there is no reason why markets would sort of remain where they would be. So obviously, and I think with the Fed indicating 3 rate cuts, I see massive money coming towards India from foreigners. So if that were to come, coupled with the local liquidity, markets are likely to remain buoyant. Of course, corrections can any time. You can't, always some news can lead to some 5-10% correction anytime. But totally, I see no reason why markets should not remain buoyant.
Vikas, hi, morning. Tamanna here, and what a morning it is. Is this now stocks reaching their true valuation? Have we gone into frenzy phase, or is there much more to come? Vikas, can you hear me?
Yeah, tell me.
Yeah. So my question was, is there much more to come, or are we now in a frenzy phase?
No, depending on what is the time frame one has. I mean, India story is a very good story from a long-term perspective. And, like I said, in the journey, there will be 5-10% correction all the time. But structurally speaking, India will continue to deliver 15 to 20% return for next decade. I think Indian economy will grow towards $10 billion economy over the next 10, 11 years, and I think that's the journey we are looking forward. So there's no reason. Of course, there will be pockets of exuberance and overvaluations. One has to avoid that. But structurally speaking, good quality companies and all those things are looking very good.
Bala, do you think calendar year 2024 is going to be all about large caps? And as far as sectors are concerned, maybe large cap banks and large cap IT could lead the way up or continue to lead the way up?
Yeah, I think the way we put out our annual outlook for 2024, one of the assumptions that we made is given the fact that the significant rally that I've seen in the mid and small cap, and having gotten a return in excess of almost about 15-16% over the large cap, we might see a renewed interest as for the large cap concerns. So we'll see that beginning to set in, which will represent both intensity. Second is IT as a sectors have gone through 2.5 years of pain period. Now, interest rate comes down in 2024. We will see the increased spending coming in into the IT sectors. And most IT companies who have been changing their business model, taking into account the new age opportunity that comes in. For IT, we felt that we could outperform. Capital goods sectors will continue to do well. Automobile sectors should continue to do well. And the banking sectors, while they will go through their own challenges of margins under check and rate of loan growth, given the fact that RBI has been a bit tightening. We could probably see a margin slowdown. Therefore, it may not come in the top in terms of outperformance, but definitely the sector being the large weight in the index cannot be ignored. Therefore, we will see some catch-up in that. But significant outperformance, our own belief is will come in the IT and capital goods sectors and automobiles.
Bala, just your take on, and you spoke about IT, you spoke about heavy industries, etc. What about the favorites that we have seen so far, which is your PSU stocks? Even today, you're seeing a fabulous response in IRFC and the likes going into election year. Is this a space where you think there is more steam? Are there any specific sectors and companies that you like?
I think PSUs, I think we should see the momentum continuing for two reasons. One, they are fundamentally getting after the question, the government to execute better most on the government spending. Therefore, it all have to reflect on the earnings of the companies. Second is some element of re-rating also beginning to happen because most of them are trading at, say, that is assuming PSU banks are trading about 1.1 time price to book. Everything being equal, whether the three times price to book discount to the private sector is justified. So I think we see that will continue to happen, which is nothing but the re-rating. But we'll have to again be very clear in terms of segregating between stock trading at reasonable valuations versus stock trades at a substantially higher valuations. That is where one has to be careful as far as the PSU is concerned.
Right. Bala, thank you very much and season greetings. Have a good one today. And thank you for joining us this bright and early on Monday morning. 22,000 being very comfortably held out on the index. Because with the kind of rally we've seen, 1,000 points have been added in the last 25 days. Do you expect this bull run to continue at least until after general elections this year? And also mid and small cap, most people would agree, seems fairly overpriced at this stage. Large cap is seeing some leadership, at least in the last 1,000-point rally that we've seen. Do you think the right strategy for investors now is to start taking profits in the broader markets and maybe remain overweight in the large cap space?
Well, I don't know that. It depends on the horizon of the investors. Frankly speaking, we believe in buying good quality companies at a good valuation, and stay invested for a long period of time. This kind of rotation of large cap, mid caps will happen. If you are a trader, I think it's good to do. But the long-term investors, I think idea is to remain invested, especially when this kind of structural bull market is there. I do not subscribe to the philosophy that there's a lot of overvaluation in the market. I don't think so. Of course, there are pockets of overvaluations where stocks are trading exuberance kind of valuations, but I don't see there is much wider market in general are overvalued. We are still able to find good ideas, structural ideas. Having said that, there will always be risk. There will always be corrections. So market corrections can come anytime, which nobody can time. But if you are, large cap is underperformed, I think can do well in shorter term, especially when the FI money comes in. I think this year definitely large caps will do well. But at the same time, when the money is coming in, it also percolates down to the broader market. So, yeah.
Absolutely. Vikas, please do stay on with us. Gautam Shah, founder and chief strategist, Goldilocks Premium Research, also joins us today on the show as we discuss what next and where next from 22,000. That's the question. And I think one thing to note is how steady we are staying above the 22,000 mark as well. It's showing that kind of a confidence coming in from investors and not only in the large cap stocks, to be honest. Of course, IT is the star of the day, but look at an IRFC. Up about 8.5–9% right now. Gautam, very good morning to you. Tell us what you think is happening in the markets right now. Is this markets finding its true value? Do you think it's a little bit of a hype? And do you see now a further upside or a bout of profit booking before that?
Good morning. I think, this is a market where you don't need to overanalyze. I think the price action has been as clean as it can get. We've seen shallow corrections all along. And the 2003-2000 bull market has taught me that, when the markets are having such a run, you don't really look at what kind of numbers it can reach at the top. I think what you really assess is where are the risks and what kind of levels below which there could be an issue. Not once in the last couple of years have you really broken any long-term support. So I think we've been good. And I think the domestic liquidity angle has just removed volatility, off the screen, because you have India VIX at a level of 12.5. Participation has been excellent. And I think the reason why markets have done so well in the last 10 days is because banks, Reliance and IT, all three put together have done so well. So there is no way the Nifty cannot move higher. I think this will continue. But still, I think there is a little bit of euphoria at the marketplace. So there could be rotational correction. I don't have numbers on the upside, but I think on the Nifty till we are above 21,500, we are good. And I think there are still immense opportunities in various sectors like IT, pharma, metals, chemicals, fertilizer, and one should just focus on them.
Gautam, let's take it one at a time. If there are investors who are looking at initiating fresh longs on the Nifty at 22,000, would you recommend it? And also, Bank Nifty, in terms of its participation, has been lagging behind in the last 5 to 6 sessions. Do you expect Bank Nifty to play its path, and hence would you initiate a fresh long on Bank Nifty as well?
Well, number one, I don't think Nifty is an opportunity. I think 2024 is not going to be about the Nifty. I think you might just see very measured returns there. It's going to be about specific sectors and specific themes. I mean, at best, you could see a 10% move on the Nifty, which is not large. It might seem like a 2,000-point move, but it's not large in percentage terms. But banks, as you rightly mentioned, I think is the key theme. I see a lot of positivity. Some of the underperforming private banks have come back very well, likes of HDFC Bank. And our favorite in the entire space has been SBI for a while now. And I see that stock outperforming the whole of this year. So banks clearly is an opportunity, but one needs to be a little selective. But as I just said, I mean, large caps, yes, there are a few opportunities, but still the bigger opportunities in the mid cap and small cap space, because as we know, 8,000 crores is actually moving into that space every single month, something that we've not seen in a couple of decades. So that for me is a game changer, and that's the reason I feel that the momentum can continue.
Vikas, I just want to talk to you about the point Gautam is making, and an interesting conversation setting up here about a rotational correction that we may see, and that the story still remains in your small and mid caps. It's not as if it's only large caps which will give you value in 2024. Do you concur? Okay, I don't think Vikas can hear me right now. Gautam, let me come back to you in specific terms. When you say that you will see sectoral correction, which sector do you think is ripe for that kind of a correction right now?
See, corrections are healthy at the marketplace, and you need the market to keep giving back so that it can remain healthy. And we've seen in the last many years that any rally which is vertical in nature never sustains. I could take examples of what happened in early 2000s and, many such examples. So I think at this point, if you look at real estate, look at capital goods, look at the auto space, I think they've seen a parabolic move. For that matter, even the PSU space. So there could be, some pullback coming anytime soon, and we are actually advising our subscribers to take profits there. On the other hand, the other 4-5 sectors which I mentioned still look excellent. I mean, take for example pharma, take for example chemicals. I think based on risk reward, the opportunity is still quite immense. So anything that's done very well over the last 6 months, take profits and move to newer sectors.
And we'll, of course, Gautam, talk to you about those newer sectors because there are very few left right now that haven't actually rallied up. Because this leg is about IT, at least the last 2 days has been. What have you made of those earnings? The 4 biggies announced numbers, 3 were, they were in line with expectations. Also because you're
getting upset. You know that. We're getting upset. Hello?
Vikas, can you hear us?
Yes, I can hear.
Yeah, because I was asking you about what did you make from the IT earnings? Largely in line with expectations because expectations were running weak. Margins have improved, but that could be a function of efficiency, which usually happens when economies are slowing down. Attrition is declining, which happens again when business is not looking as promising. But the markets seem to have given a thumbs up. Do you think this rally is justified with IT stocks? And would you buy any of these IT stocks at these elevated levels?
We've been positive on IT stocks for quite some time. Whole of last year when markets were negative, we were quite positive on IT stocks. And I think it's a structural story. Again, like I said, Indian IT services exports will go to $500 billion from 200 approximately in next 5-7 years. So if this kind of move is there, there will be many companies which will become bigger. Of course, so and this now I think probably execution cycle might pick up. With the Fed rate interest rates coming down, potentially, some more spending might come in the U.S. economy on the IT. So I think we've been quite positive, and valuations are not very demanding. So one has to do your own stock pick on that. But broadly speaking, we like the sector.
All right. I just want to get the take on what's happening with, on the IT front, or what you can do next on the IT front with Gautam as well. And just look at what run-up we've seen. Wipro is, in another trajectory right now, about 11% in trade. What would you do now with some of these counters, Gautam?
Well, I would stay long. I think that's been the view all along. And to be honest, IT is probably one of the few sectors in the market to be not trading at lifetime highs. In fact, if I'm not wrong, it's still about 7-8% from its lifetime highs, whereas every other sector in the market is actually trading at life highs. So I think the bigger opportunity is still in IT. It was under-owned. I think people talked about a lot of headwinds, but given the results of the last few days, I think, the sky is clearer for many of these IT stocks, and that's probably the reason a lot of institutions are coming in and buying even at these prices. So our working target for the index is about 39,000. I think we'll get there gradually. And so one should stay invested, and if one is looking to park fresh money, I think even at current levels, TCS, Wipro, Infosys, HCL Tech, Tech Mahindra, all actually look pretty good.
Gautam, you said there'd be newer sectors, and we've seen sectoral rotation take place. I mean, RIL was one of the biggest contributors in the last 1,000-point move we've seen on the Nifty. Real estate, that was a huge underperformer, has played enormous amount of catch-up. IT as well, like you said, was lagging behind in terms of valuation, is doing okay right now. What's next? So if an investor comes on today or a trader comes on today looking at fresh longs or fresh trades, what stocks, sectors would you advise him to go long on?
See, our focus is very clear in the form of IT, pharma, metals and chemicals. But I think if you have to really look at risk reward, which I think is extremely important at a 22,000 index, I think metals and chemicals offer you the same. In fact, chemicals as a sector has done nothing over the last 18 months. I hear that things are picking up on the ground and the charts are also very well placed. So I think many of the top stocks, RT Industries, Deepak Nitrate, SRF, I think are big opportunities, fundamentally super solid companies with very good charts. So this, I think, for fresh investors looking to park money, chemicals, and if you look at the metal space, a Nalco, a SAIL, a Tata Steel, a JSW Steel, I think they have a lot of room on the upside. So fresh commitments can be made there as well.
All right. Thank you so much, Gautam, for speaking with us today. It's a big day for the Indian markets, and we've had a variety of views coming in here from top experts. The consensus seems to be that this is not the peak yet. There is a lot more steam going forward. Not that corrections are completely ruled out. You will see sectoral corrections. There may be some pockets of froth that are building up, but the overview continues to be that you have a very strong Indian market fueled by domestic investors right now, also fueled by corporate numbers. But what has that journey to 22,000 been like? Agam is joining us to track that entire trajectory. Agam.
Right, so it hasn't really taken too long for us to move from 21 to 22,000. Well, 26 days to be precise, as you can see on your screen there. It took a bit longer, slightly longer, for the journey from 19 to 20 and 20K to 21K. But for now, and naturally on expected lines, even as we will get to the next milestone, perhaps that number will be even smaller, hopefully. Let's move on and talk about all that we've seen further on in terms of, the Nifty valuations. Now, this is, of course, as far as your EPS is concerned, but I want to talk about price to earnings ratio. For now, of course, we're anticipating about 1,000 rupees per share on the Nifty as far as FY25 EPS goes. And for FY26, of course, that number is something that we're going to need to reconsider. But let's move on and talk about your price to earnings valuation. So at the moment, FY25 price to earnings stands at around nearly 22 times and 20 times for FY26, which is still at a significant discount to your 5-year average. Well, we've spoken to a handful of fundamental and technical analysts who also suggest there is more steam left. And at the moment, considering the kind of price to earnings valuations for the Nifty too, we're nowhere close to not only the peak, but even the mean. So not only do we need to go above the mean, but potentially even move higher. So there is a lot of space for an up move when it comes to the Nifty 50, at least in terms of valuations. In terms of top gainers, of course, we have Tata Consumer, Wipro, Bajaj Auto over the course of the last 12-odd months, Adani Ports and Hero MotoCorp. So a lot of companies from the automotive as well as the FMCG space. In terms of contributors, of course, we also have Reliance Industries, Infosys, and TCS. Let's move on and talk about a handful of other stocks which have, in fact, weighed down on the indices, and we'll talk about that as well. So top laggards are, Maruti Suzuki, HDFC Life, and Eicher Motors. And in terms of UPL and Bajaj Finserv, those are the other stocks which have, of course, not done too well as far as these markets go. Well, all in all, the takeaway perhaps that we can get based on the valuations and the contributors is that, we are nowhere close to being done at the moment. This certainly is not a state of euphoria, and it's a wait and watch on that one. But for now, we have moved about 22,000, and it's a wait and watch on when we can move about 23,000.
Right. Thank you, Agam. It is an exciting journey. It has been exciting. Historically, we said this, that Jan is usually a weak month for markets, but history has been defied, and that's what's going to be very exciting for all the bulls who are watching out. We are nowhere close to the peak. Even 22,000 has been taken out, and we've actually built onto those gains in the last couple of minutes. 22,050 is what we have in the index, pretty much at the day's high point. So not letting go, not letting loose even at this stage. Well, we'll take a quick break. We'll come back. Capacite Infra joins us on the other side. They are talking to us about raising 200 crores worth of a QIP and their expansion plans.
Welcome back. You're watching India Market Open. We're talking now to Subir Malhotra, promoter and ED of Capacite Infraprojects, the company in news for raising 200 crores through a QIP. In fact, Quant Mutual Fund, Singularity Equity Fund, ITI were some of those who participated, as did FPIs like Societe Generale and Morgan Stanley. Subir Malhotra with us now. Mr. Malhotra, very good morning and thank you for speaking with us here at NDTV Profit. Great to have you on. Let's begin with what you intend to do with this fundraise. What's the idea here?
Well, you see, the market's looking really good. The order book is really nice and the pipeline is really strong. So that's what the money is for. It's for growth. And it's for improving project executions at the moment.
Right. Let's talk a bit about your recent projects which have been in focus. And, you know, you're dealing in the real estate space, the high-rises space, somewhere where we have seen an absolute boom. How is this cycle building up? And can you give us some details of the big orders and projects in the pipeline?
Well, you see, we are just at the right side of the curve now. Government spending is booming, hospitals, airports, low-cost housing, PMAY, you name it, the government is going gung-ho about the expenditure on the CapEx side. Similarly, on the other side of it, the real estate cycle has taken a turn for the better, and that's an understatement. So, be it all the big developers, and especially in the MMRDA area where high-rise or super high-rise is the new norm, we're talking about 50, 60-story buildings is, you know, passe. That's where we are very strong on. So that's another sector that we are strongly looking at. And that's where we intend to focus our energies for the near future.
You're talking about your high-rise projects in the MMRDA. Can you give us a more detailed breakdown of your order book? Are most of your projects in the MMR area?
So we have an active order book today of around about 10,000 odd crores, maybe a little more as of September 30th. We had an outlook of locking 2,000 crores as new order books in this financial year, FY24. As we speak, we've already done 1,750 and the pipeline looks very strong on that. And that's, again, one of the reasons of going back to the market for this growth fund. And some of the marquee clients remain as Raymond's, remain as Transcon, remain as Oberoi, remain as M3M in Delhi, DLF, you name it. We have the whole gamut of the good developers on our side.
Subir, this is, of course, what I believe, and I guess you are giving us a cue of what's happening on ground. But if I look at your earnings all through the last 3 quarters, we've actually seen top-line decline, and so has profitability before tax. Is that trend set to see a reversal from what you're indicating? On-ground activity is picking up, and we should expect a better quarter this time around.
Really. I'll be slightly more subdued on what I want to talk about that right now because we are in the blackout period as we speak. And so on a broader sense, yes, we are looking at least a 25% CAGR. And this will definitely bode good for both the top line and the bottom line of the company.
Right. With regard to the QIP as well, what sort of equity dilution can we expect? Has that been worked out?
Well, it's approximately 10% on the pre-QIP or the pre-offer. And that's where we are roundabout going to land up with.
Also,
we've had a very strong response to the QIP. We actually had almost a 4x response to what we actually wanted to get. It almost felt like, you know, a QIP of a deja vu of the IPO, where we had a rollicking 180 times response to our offer. So yes, we are very thankful that the market looks at us positive.
No, it's right. I mean, you'll have the likes of Societe Generale jump in at the get-go. So, yeah, it's looking exciting. The sector is looking promising, and we're going to give that to you. Just very quickly on the QIP, you've talked about the big players that have come, and we've seen that in terms of the exchange notice as well that was sent by you. Now, after you've done this QIP and the funds have been raised, is all of the money going to be used for expansion, or would you be looking to retire some amount of debt on your books? What is the plan? Is it largely and only expansion? And funding projects, I guess?
So it's largely growth and to improve project executions of what we have. That's our main focus. I think other things are just, cascading effect of what we are otherwise going to do for debt, etc. But the principal focus remains growth, and the principal focus remains improved project execution.
Subir, just a couple of more pointers, and this is more on outlook. I know in the blackout period you cannot really talk about margins, but I want to get a sense whether input cost prices are showing some pressure, and what is your outlook on input prices, which did see a run-up in the last few quarters?
So, we operate on a basis where we are largely protected as a pass-through price on all the major input costs. On the government side, we have project escalations that are available to us as part of the contract. On the private side, most of the materials like cement, steel, etc., are as a pass-through price. So speaking on it on a broad basis, they really don't impact us on our profitability at all.
Okay, that's interesting. In terms of expanding to newer territories, what is on the anvil here? And if you can share any ongoing strategies in that sense, or are you going to be focused on your big cities and MMR?
No, as far as the government spending is concerned, it's happening all over the country. You have airports coming over everywhere. You have stations coming over everywhere. You have hospitals coming over all over the country. And as we speak now with our pre-qualifications, we are almost, pre-qualified for almost the biggest projects in the country, or towards the biggest projects in the country as we speak. So yes, wherever there is an opportunity of a good size project, we will bid for that.
Right. Subir, very lastly, I want to quickly just talk about, and of course, we will be watching out for the earnings for more on that. But in terms of borrowing costs, that seems relatively high. Are you working to negotiate that and, of course, reduce your borrowing costs? Because I'm guessing the debt equity, the return on debt is seeming a little, it could be better, I guess. Some efficiency, operational efficiency on the cards?
As we speak, we have a very good debt to equity ratio. On a gross debt to equity, we are 0.3. On a net debt, we are something 0.17. So on that level, we are pretty sorted out. But yes, on a bigger picture, we will always keep on looking at it as a company strategy and a finance control cost sector. And it is on our radar also.
Right. Well, that is Subir Malhotra, talk about Capacite Infra. Subir, lastly, any big projects in the pipeline that you're bidding for that could be helping things look up?
Well, I can only say that the pipeline is, at this time, sometimes we have to say, okay, let's take a step back and see what all we want to bid for, because that's what the landscape is presenting to us. There are huge opportunities available in the country today.
Right.
And we are very, 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 very gung-ho about them.
Yeah, I'm not surprised. Congratulations. You've had participation from the likes of Society Generale. Business is looking up. On-ground activity, like Subir said, is showing signs of revival. So lots of green shoot. Remember, the company is in focus. They've had approvals to raise 200 odd crores through a QIP. The stock is under pressure. Remember, while the plans seem to be on point, their numbers, at least for the last 3 quarters, have been consecutively seeing some amount of weakness, but that could be of nature of the industry itself. 0.5% cut on the stock as we speak. The markets in the meantime looking fantastic. The Nifty is very comfortable above levels of 22,000, so it wasn't a kiss and go situation. We are off the day's high point. In fact, we have dipped below 22,000. Almost at the day's low point, 21,995 is what we have, 22,000. So that's the trading range. We spent about half an hour at and above levels of 22,000. Now seeing some profit taking that's emerging, still up about 108 points on the Nifty. The Sensex also looking quite good. The breadth of the market, though, has deteriorated in the last half an hour, and that is worth taking note of. I'll quickly take you through the gainers. Wipro is also well off the day's high point. It was trading 11.5% higher, but we are seeing profit taking. The stock is now up only 7.5%, so it's 5.5% off from the day's high point. Tech Mahindra continues to look good. HCL is also trading 2.5% high, but all these stocks are trading off their day's high. Maybe they'll spend some time consolidating and, of course, reinstate that rally in the second half of trade. Apollo, Titan, Bharti, Airtel are all looking good. On the losing side, HDFC Live, the numbers were a huge disappointment. The stock gives it a thumbs down. The counter is the biggest loser, down about 3%. Tata Consumer Products acquisition also not getting any cheer from the street, down about 1.5%. Well, Adani Ports, Power Grid, Hero MotoCorp are some of the other losers. With that, we're completely out of time. Thanks for watching. We have Vetri Subramaniam, CIO at UTI Asset Management, who talks to us on Talking Point.